Hi, my name's Karen Newton. Welcome to this week's video where we're looking at diversification versus concentrated risk. And the reason I want to focus on this at the moment is some news that is going around about Strategy, formerly MicroStrategy, who are under threat at the moment of being delisted from the share market. Now, the reason for this delisting is a conflict between whether they are a software company or whether they're a Bitcoin fund. And this comes down to the fact that all the assets for Strategy are in Bitcoin. They have converted a lot of their balance sheet into Bitcoin. Now, I'm not saying don't do that because every company needs to have assets on its balance sheet. But this concentrated risk has caused an issue for Strategy being listed on the share market. As a result of this, Strategy have brought in cash reserves of 1.4 billion to offset some of the risk through Bitcoin, and hopefully that will be acceptable to the markets. But this goes deeper for personal investors because there's a lot of investors who feel that they want to be in one asset class. And the problem is the risk, this concentrated risk. Let me explain. I cover 4 categories. Those 4 categories are business. That's how you generate cash flow. That's how you make your money to allow you to go and invest. Now, I'm a solopreneur, but I run multiple businesses. And I'm able to do that because I can build an online business. I can then automate it and leave it generating income. That allows me to move the profits from that into investments. And the investments I use are shares, digital assets. So digital assets are your shares, they are your Bitcoin. Then there's property, and finally, there's gold and silver. Now, this diversification is essential because when we have this concentrated risk, if one asset class falls, then you lose everything. When you have a diversification, one asset class goes down, you have others that are going to go up. Now, for example, what's happening in gold and silver? Gold and silver are actually going up. Bitcoin is coming down. We've seen it drop off the highs of 127, 128K down to 90K. That is a big drop. But on the other hand, we have seen gold and silver go up, and I have no idea what the price is doing today as I talk about this, but based on previous figures this week, silver is up 85% for the year. So although we've got that drop in Bitcoin, we have an asset that is going up. And if you're balancing your investments, it means that you're not too concerned about this dropping because you have another one that's balancing your portfolio out. One of the biggest problems with concentrated risk is that if something goes wrong, you're in panic mode. You can't think creatively. You can't think logically about what is happening because your one source of income, your one asset is actually dropping. When you have this balanced portfolio and you have diversification, that takes a lot of stress off you. It's not good when an asset goes down, but it's a fact of life. Everything goes up, it goes down, it goes up, it goes down. It's a revolving cycle. And that's why it's called an investment cycle. But by spreading that risk, you take that pressure off yourself. Within each of those asset classes, there are multiple classes. For instance, if we were to talk about property, we have commercial property, we have residential property, we have holiday lets, we have hotels and land, commercial land, growing land. That's all. I class all land as part of the property group. There's lots of different types of investments, and some are booming while others are struggling. If we take a look at the commercial market, that is struggling. There's a lot of loans that were fixed-term loans that are maturing between 2025 and 2027. We have this wall of credit. And the problem is that the commercial took these loans out when interest rates were low. Now interest rates are high. They can't afford the new mortgages. And a lot of commercial are just being left to sit there, do nothing, and the loans will just disappear. Well, they won't disappear, they'll be called in, but people are not renewing. Now, this is causing a big problem, especially if we look at the Hong Kong property market, where companies like banks like HSBC have actually said 73% of the commercial real estate portfolio is at risk. That is a huge amount of property that is going to struggle to refinance and is going to come up the market. So if you are in commercial real estate, that is going to go down in value. However, land is becoming very popular at the moment. People are realizing they need land for growing foods, crops that we need. There's a lot of land being built for development, demand for housing. There is always a counterbalance within each strategy. So this brings me back to the diversification. When we have concentrated risk, if we were just in commercial property and that's going down at the moment, hey ho, we are in trouble. However, by being diversified and in different types of assets, different asset classes, we have some that are going up and some that will be generating extra income for us. That helps us balance out what would be happening on the ones that are not performing. Diversification isn't desperation. Diversification is a strategy that helps you navigate anything that is happening in the economy. Diversification is protection. You protect the assets that you have. And diversification is your number one strategy for building wealth. So look at what your portfolio is. Look at the investment strategy you have. And are you building across the 4 strategies? Or have you got concentrated risk, which is leaving you really at financial risk for the future? I hope you've enjoyed this. If you are interested in learning more about diversification, I have a newsletter below, which is called Strategic Investor. It's free. It goes out every Saturday. The link is below. Please sign up for that. If you want to learn how to put this into practical use, please check out the Zero to Millionaire. This is something that takes you from where you are now to a millionaire or higher if that's your aim, and it teaches you diversification. Thank you for listening. If you've liked this, please subscribe and share. It helps. Thank you.